Welcome everyone to the Watchlist, a webinar series for ASX listed companies to pitch to real investors so they can be considered for your watchlist. Our job is to showcase companies that are on your watchlist or to give you ideas of companies you might want to put on your watchlist. Looking at the size of the crowd here today, clearly a number of the companies presenting today are on your watchlist. And today it's all about gold. Gold companies, gold keynote, gold exposure. That's what everyone's talking about, which is why we brought that topic to you directly. We've found 4 cracking resources companies in the gold sector to present today. They are Cavalier Resources, ASX code CVR, Maximus Resources, ASX code MXR, Dreadnought Resources, ASX code DRE, and Medallion Metals, ASX code MM8. In addition, I'm thrilled to say we have a keynote presentation from Hedley Widdop, Executive Director of Lion Selection Group, ASX code LSX, which is an investment company specialising in high growth, early stage mining development companies. So when we're looking at experts, we get one of the best in the space to talk about gold. Remember, the webinar is interactive. We want you to ask questions of the presenters. So while they are presenting, think up some questions and submit them using the Q&A box on your screen. Now, without further ado, I'd like to introduce our keynote presenter for today, Mr. Hedley Widdop. Hedley, over to you.
Hi. Thank you very much, David, and thanks for inviting me on. I think you've got the buttons to advance the slides there. So the title of this talk is gold. I've got a picture of a rock there, which has a little bit of gold in it. Couldn't start the talk any other way, really. And I'm going to talk to a few fundamentals and things which just sort of hopefully set the scene for you guys to get all hot and frothy about some of the explorers that are coming along afterwards. So take me through the disclaimer, would you please, David? Terrific. I can give you all sorts of ideas and things, folks, but I can't tell you what to invest in. That's pretty much what the disclaimer says there. But if you want to take my advice, you're going to have to buy some Lion. So go and have a look at that. I spent a few hours on the weekend coming up with some charts and concepts that would really talk to this gold thematic. And there's all sorts of conspiracy slippery slides that you can slide down when you want to talk about gold. But having come up with a collection of things, I thought, well, where the hell do I start? That's the biggest problem that I had here was how do you start a talk on gold? And of course, maybe the best place is with a chart. So this is the gold price going back to 1970. And I think one of the things that jumps off the page here, hence the title, up, up and up. Gold's had a couple of really high growth periods in its history post Bretton Woods. So it became unpegged. It could have a life of its own, and it took on a real strong life of its own. Probably where this varies from most commodities is that a lot of commodities reach a price point where the people who are buying it feel pain because they need to purchase the commodity and then use it for something. Gold's value in use is just that it's an investment that protects people and provides liquidity when they can't get it from cash, or when there's difficult or unusual things happening in the world. So gold is absolutely uncapped in terms of the price it can get to. The highest price that people will pay for gold is dictated by investors' imaginations and not what they're able to pay in order to pass it on to someone else. So that's the backdrop. Take me along another one, would you please, David? The other thing which is different about gold is its risk profile. And this is from an investor's perspective, right? Investing in companies which are either producing or hoping to produce gold. There's a whole bunch of commodities you can focus on if you want to be in explorers or if you want to be in miners. And all of those are slightly more difficult. Gold is unusual because as an element, it doesn't complex very well with other elements. So it's reasonably easy to extract. And, you can probably think of some tough gold projects, all of you, but they're still easier than complex base metals or PGEs, rare earths, uranium, you name it. It's easier to get gold out of a rock than just about any other thing. In fact, it's often present in its native form. So it makes it easy to separate in a physical process, let alone having to use chemicals. The second thing about it is that makes it unique is that it's easy to sell. So the extraction risks and the marketing risks that apply to gold are the lowest in the entire commodity space. So this is a chart that we talk to in Lion, and we try to focus very much on the lower risk things, unless there's a very, very, very clear exception. So we're towards the bottom end of that chart. That often drags us towards gold investments. It also means that gold projects are scalable, right? So in a lot of cases, you can start a gold project small and then build it up. I know that's not often how they're invested in, but that flexibility exists because of the unusual nature of gold and how it complexes. Next one, please, David. I use this picture when I've spoken to, well, you've all got it in your minds, right? That gold nugget that flashed up, and that kind of just makes the point that this is what gold is. I've used that picture when I presented when each of my kids was going through grade 5. Their classes wanted a primer on gold before they started to talk about the Victorian gold rush, which was something that they looked at historically. And you put that picture on the screen and say, does anyone know what that is? And most of the kids in the class say, that's gold. Which is a really interesting thing, because if you put a picture of copper or iron ore or diamonds or coal or anything else like that, they'd be guessing. It seems with gold that they know. So it's got this ubiquitous mindset for people. Best place to start, though, is if we want to talk about what's going on in gold now and why it's interesting, a bit of history is really important. So what I've got on the screen here is the annual global production of gold going back to 1966, and overlaying on that is the gold price. Now, it's a slightly different chart to what I showed you before, because the gold price I've used here is on a log scale, just so that you can see each of its runs compared to each other. So it doesn't sort of diminish the early history of gold by the way that I've presented it. So you can see them each. And you can see there's been 2 enormous bull runs in that time, where it's gone up 18 times in the late 70s and 80s. And then we had a 7 times run. Depending on how you cut this, you might take a slightly larger multiple or a slightly smaller. I haven't taken the absolute intraday tops or the absolute intraday bottoms. I've just sort of cut it to what looks good on a weekly chart. All that I'm presenting this for is that those bull runs have started when gold production started to slide away. Now, that's not to say that will be the nature of the next bull run in gold whenever that happens, and perhaps we're in it now. But we have seen production fall away. And if over that 50, 60-year time frame, one of the things which has corresponded with gold bull runs starting is that production weakness and things tightening in the market, we've seen that exact same setup happen now. So interesting place to start. One more, please, David. Another couple of interesting events to overlay on the same chart is how producers have behaved as buyers or sellers of gold. And I know that sounds stupid, because if you make gold, you should just be selling it. But throughout the 70s and then the 80s, but particularly the 80s, when interest rates were becoming high, producers of gold were able to engage in forward sales of gold. Now, people talk about this as a way to protect yourself against being able to put pay back debt, things like that. It's a risk management product. But when used as a financial speculation product, it becomes dangerous. When interest rates are higher, you can sell gold at some point into the future, distant from now, at a higher price than what you can sell it at spot. And that difference is proportional to the current interest rate environment. So through the 80s, you could sell gold at a considerable premium to what the spot gold price was. And that encouraged a lot of these producers to take on fairly large and complicated hedging positions. Now, if you think about it, if the industry is selling gold that it produces, but it's also selling far more gold than it produces because it's selling into these forward sales, it could be depressing the price. And I think that one of the flattest periods that we've seen in the gold market corresponding to this, there is absolutely no mystery in my mind. The flip side of that, when gold price started to move in the late 90s, early noughties, gold moved up a little bit, and a lot of these hedging positions were instantly out of the money. So they became exploding, enlarging financial obligations of these companies. So they had to de-hedge, they had to buy back ounces. And that's what you can see as the next box along. So through the sorry, I had a phone call coming through through the noughties in particular, the producers were buying back enormous hedge positions. They were buying, in some cases, millions of ounces. The industry as a whole had sold forward by the year 2000, I think it was, about equal to a year's production. So they had to buy back the equal of a year's production inside of sort of circa 5 or 6 years as they de-hedged. And when you think about that, there's a big producer buying behavior in the background, which is so substantial, that has an effect on the gold price as well. Let's move on, Dave. Please, David. Last couple of just interesting factors, particularly if you're looking at what's happened in global gold production there as time has gone on. There was a peak in South African gold production in 1970. South Africa used to be the biggest producer of gold by miles and miles and miles. That started to decline from 1970 onwards, and as you can see, it had an impact on global gold production then. From 1980 onwards, carbon in leach and carbon in pulp processing proliferated, and what that meant was that you could produce economic quantities of gold from much lower head grades because you were able to produce from lower grade ores, and that had an enormous effect on production. It enabled a huge amount of production to come to the market, and that coincided with this period of hedging. So flooding the market with gold from mines, flooding the market with gold from forward sales had an effect on the price. And then, as I said, when it was de-hedging, it gave it a squeeze. Let's move along. Another one, please, David. Just to round off on global production, the biggest producer of gold at the moment is China, followed by Russia, and then Australia. Their 2022 figures, these are sometimes a little bit lagging, but just interesting to note, because as I go on a bit from here and talk about why that's interesting, China and Russia sit there as being slightly different to most of the other gold producers in terms of how they engage with the US dollar global money market, if you like. So I just thought I'd flash that up as a bit of context. Next one, please, David. So this is where the rubber hits the road. Why is gold interesting? And the reason why gold is interesting to investors at the moment in particular is because gold has taken a run in the last 18 months or so. It's gone from a low of about 1640 something to about 2350 something. So it's up 40 odd percent in a period of about 18 months, or let's say since late 2022. Now that's a pretty significant run, and particularly when you think about what's been happening in the micro cap or the risk end of the market, there's been not a lot of love for things. So there's been a real flight to safety. Perhaps gold has benefited from that, but the long-term fundamental for gold is driven by an inverse correlation. So gold has tended to flourish in environments where real interest rates, which is the rate of interest minus the rate of inflation, have been low to negative. And with interest rates going up, that's created this environment for gold, which is not productive. If you had to calculate how that was going to go, you might say it should move sideways or possibly a little bit down, but we've seen a very strong move upwards. So it leads to a question mark. Why is that happening? And I think that's the beginning of the conversation here of why is gold interesting right now. Another one, please, David. I've heard a lot of people say the reason the gold price is going up is because central banks are buying. And to some extent, that's probably correct in that at the moment, central banks are buying, and at the moment, gold is going up. But when you just look at the net purchases of central banks, they've actually been net buyers of gold by a long way since 2009 onwards. So that kind of pattern breaks down. Unless you can extrapolate that a bit, just press the button one more time for me, please, David. So this is where you break out the central banks according to what sovereign nations they represent. You had Western banks being enormous net sellers of gold up until 2009, and then they dropped away. They've been tinkering with the market since. They certainly haven't been the margin pricer of it. And then you've got the BRICS, and this group of BRICS, which is it was originally Brazil, Russia, India, and China. It's expanded. It now includes Ethiopia, Iran. I think Saudi Arabia is talking about inclusion. I can't remember if Turkey is in or not, but these nations have been the big purchasers of gold. And I think that's the interesting thing when you look at this chart. There's 4 big spikes in purchases, and these are big purchases which were reported and have probably taken place over months. But as people talk about central bank purchasing, they say India's buying or China's buying. Particularly at the moment, China is buying. And there's this transfer of gold, if you like, from west to east. It's been happening for a while. That's the point that I want to make. So it's a long-term fundamental, but it is getting interesting now. Let's take another step along, please, David. So this is the central bank purchases zoomed in. This is from 2022 until present, their monthly balances. And I've just separated China from the rest of the world. And the interesting thing about China at the moment is its central bank has purchased gold 18 months in a row. Now, if you look back through World Bank data, it actually tells you what all the different central banks have done. It's got it on a monthly basis. China's purchasing of this nature is one of the most aggressive buying streaks that we've seen of a central bank in the data, which goes back to 2002. So that stands out. China's foreign reserve balance, or the proportion of its foreign reserve which it holds in gold, is exceptionally low. I think it's about 6%. Now, that compares to the United States. Other developed nations have a higher holding of gold. I think the average even of emerging nations is about 15%. The World Bank put out a handbook, which I don't think central banks really need handbooks, but a handbook which suggests that central banks should be holding circa 22% of their foreign reserves as gold. So China on that margin is a long way behind. I'm not sure if that's particularly pertinent. China has never necessarily followed what Western organizations think they should do, and probably likes to be a little bit different as well. So the reason this stands out to me is not necessarily because of the low proportion of it, although that will probably become significant. For now, they are buying. That's the important thing for me. This is not a fundamental. This is a behavior. We can see it happening. And I suppose the one thing that you would extend from this, and I don't want to go down this conspiracy theory slippery dip, but China, Russia behind them, has also been a significant buyer, and they're both significant producers, right? So I pointed that out a couple of slides ago. Whether that gold that they're producing is going onto their central bank balance sheets or not, it's in the country, and it's part of the sovereign capital base, which is important. 26th of February 2022, the US and the Eurozone imposed sanctions on Russia, which blocked them out of the US dollar system. So it made it very difficult for the Russians to purchase anything with US dollars. It made it very difficult for them to access any foreign accounts that contained US dollars, and it made it illegal for Russian people who were, sanctions against them by the US to use US dollars. So it, creates an interesting dynamic if the US dollar is a global reserve currency. So gold is something which can't be confiscated by the likes of the US. I think they have a very good reason for all this, right? Because of the behavior of Russia in the Ukraine. But at the same time, this is a big sovereign nation turning around and saying you can't use our global currency anymore. So gold takes on an interesting role there. Whether that's what China is caught up in, or whether it's just China saying we want to diversify from the US dollar, they're both pretty good reasons for them to hold the currency. So I point that out at that point. Move along one more, please, David. These slides, or these charts, these are to show that it's not just the Chinese central bank which is buying gold, it's Chinese people as well. So this is on the left-hand side, bar and coin purchases. I think it's quarterly data back from 2010, and on the right, it's consumer purchases. So, smaller quantities. And I guess some of you might have seen the articles about Chinese purchases of gold beans, which are a smaller fraction of an ounce. I think it costs about $80 or something like that. Of course, that's going to change as the price goes up, but enables people to purchase gold in small quantities. And I think the really fascinating thing about this is that when the Chinese consumer starts purchasing something, it's an enormous consumer group. It's got huge buying power. And it's a market where their ability to export capital is severely restricted. And they've seen poor returns on things like real estate and their own stock market in the last 12 to 24 months. So, this is a market which could be looking for a way to diversify how it holds its capital base as well. So the proportion of those markets, which is dictated by China, has just moved to the highest point in 14 years. That's got to be significant as well. So Chinese people are buying this gold. One more slide along, please, David. Now, this is the other correlation of gold, which has recently broke down, and it's broken down extremely strongly. Since 2003, when ETFs first became a thing, which enables people to own gold via a securitized product, and they don't have to store it, they just buy it, and they can trade it if they wish. Since 2003, gold has traded in a close correlation with the buying behaviors of ETFs. So if the ETFs are buying, pushes the price up. If the ETFs are selling, pushes the price down. These ETFs, the Western investment market, has become the marginal pricer of gold. 18 months ago, that broke down. It wasn't immediately obvious to start with, but that corresponds with the point where the Chinese central bank started being an aggressive buyer. So as you can see here on the right-hand side of the chart, gold jumps up whilst ETFs have been selling. The Western ETFs have all dropped their tonnage of gold holdings in that 18-month period, whereas the Asian ETFs have built their holdings. So smaller numbers involved with the Asian ETFs, but that is where investment demand is building, and that corresponds with central bank demand and retail demand. One more, please, David. And I mean, part of the reason I think that is enormously significant, right, is that there's one market which is taking a bet on gold. Let's say that's the Chinese market. It's moving it in a direction which the rest of the Western market thinks is wrong. Western markets are selling into that. For that to be the case, you kind of say, well, there's only one market that buys this. It's like a bet one side against the other. And I don't know exactly how you pick teams for that, but it strikes me that there's about 700 million people in the Chinese middle class. If they all decided to buy an ounce of gold this year, I suspect that would probably defeat whatever the objectives are of the Western markets in its behavior towards gold. They might sell into it for some time, but then that brings me to this chart. At some point, gold in its history has started to outperform equities over, say, a 12-month rolling period. And that's the point where Western markets, which is traditionally where a lot of the buying has come from, start to say, are we missing something? And if they get FOMO, as we all know, I mean, whether it's NVIDIA, whether it's Bitcoin, whether it's any, when something gets ahead of steam, it starts to get buyer interest. And you start to see money rolling out of things like bonds or higher priced equities into other products. And in this case, the speculation is, will that happen with gold? So you've got the gold price there, log scale, the S&P 500, also log scale, back to 1970. One of those has returned 62 times over that period, one of them 60. So they're actually quite close together in the return profile if you exclude earnings. But then when you divide one by the other, the S&P by gold, you can see that there's been periods where one has had the ascendancy. And for gold, that has been periods of time of great uncertainty and high inflation, which has overrun interest rates. So when you run into these environments where interest rates are slow to catch up to inflation, and you decide for yourself what you think is going to happen, gold can get that head of steam. And with a buyer which is ahead of this, which is China, I just wonder about how quickly that could happen. We know that when gold gets ahead of steam, it really takes off. So I think that's interesting. One more, please, David. So you can't talk about the gold price without talking about gold equities. And there's four other fellas on this call who are going to talk about their gold equities. So here's where I segue to them. I've got a 4-year chart. I've got the price of gold, which is in the yellow color. I've got the ASX gold index, and that shows you what the Australian gold producers, if you like, have done in the same period of time. I've rebased all of this to mid-April 2022, and that was the point where the microcap market in Australia started to fall away, which has affected all the explorers. It's also the point where interest rates went from sort of 0.5% to 2%, through 2% and into the 2 to 5% range. So it was the point where interest rates rubber hit the road. And we've seen the explorers fall away in that time, irrespective of what they're focused on. We've seen gold catch a bid, and we've seen gold start to move up, and we've seen that happen quite aggressively recently. We've seen the gold index, the producers, start to move up with it, although its performance hasn't been as good as gold in the same period of time. It fell away for a period. We've seen the gold explorers continue to fall. So the question is, when are they going to catch a bid? So I suppose at this point, there's a couple of interesting questions to ask, and I don't know what the answers are, but if the Western market is speculating in one way about gold and it's selling into Chinese buying demand, then you sort of have to take the view that a lot of the Western market doesn't believe the story for gold. Yet it's confronted with the gold price is the fundamental, which drives interest in gold equities. So gold equities start to go up. And is that because the buyers of the gold equities believe in the gold equities, but not in the gold price that sits behind it? Perhaps that's a little bit too esoteric. The point I was making on the slide earlier was that when FOMO kicks in, you might start to see either the Western market stop selling or become buyers. And if that's the case, then it's going to firm that up for a lot of things. And I think that's probably the case for gold explorers as well. So if you folks are watching the gold market and you see that ETF volume dropping away and just level off, then I think that's probably the point where the gold explorers really start to shine. And at the moment, we've seen tremendous weakness in a lot of other commodities. So gold stands out there. If there's going to be a dollar going to risk capital for explorers, it's going to find these explorers. They've had a while in the wilderness, and I think they've had a lot of time to think about what their best targets are, which to me makes it a tremendous time to be thinking about how you buy into these. It's no good waiting until the gold market has run and these guys have all doubled in price, because these gold equities, when they're exploring and when they're finding things, can have multiples attached to them, which are huge. You don't want to be sitting there going, this is half over, or it's 90% of the way there. You kind of want to pick some of your bets early. So now is a great time, I think, to be looking for good management teams with really interesting and dynamic projects. And the chart I'm showing here is just that is the point we're at. One more, David, and then I'm going to leave you all with a last thought. So this is just an absolutely selfless plug. Lion Selection Group has invested in 7 news stories in the last 24 months. They've all had an aspect of gold to them. Most of them are gold focused, and there's a couple which are gold and base metals. So, it's not to say we've seen this coming. What we sensed was that the microcap market was falling and that the lowest risk things that we could invest in were going to be gold stories. When we've gone and compared them to everything else, we've found that the risk profile in the golds far outweighs what we were seeing in quite a few of the base metals as well. So the best projects we've been able to find have had a gold-rich flavour to them. So there's a few names on this page, but you're about to hear from a few more as well. We've put pegs in the ground all over Australia in order to back these things. In a market where the world is interesting, the world could be a bit dynamic, it's a great place to have your money. So we're very happy to have these projects in Australia, and I think these are probably, in my mind at least, exceptionally strong gold stories to be backing. So that's it from me. Happy to leave that slide up, and David, I'm very happy to answer some questions as well.
Thanks, Headley. Great presentation, and clearly setting the scene, particularly for what's due to come. We may move on now into our presentations, because I think you have set the scene beautifully. You've whet the appetite. You've let people know that gold exploration companies shouldn't be forgotten for all the reasons you've outlined. And we look forward to following not just line selection and also your views on gold, and see how they progress over the coming months. So, Headley, thanks for the presentation.
Thanks, David.
Now I'd like to introduce the first of our company presenters, Daniel Tuffin, Executive Technical Director of Cavalier Resources, as I said, ASX code CVR. Cavalier is a Western Australian minerals exploration company possessing 2 gold projects in the goldfields region of WA, one near the town of Leonora and the other near the mining hub of Kalgoorlie. Daniel, over to you.
Yeah, thanks, David. And thanks to Headley for that great insight into where the gold market's going at the moment. Just to further touch on that, we listed this vehicle, this company, just under 2 years ago. And when we did, the gold price was about US $1,000 less than it is today. Really, once you start developing some real value in the ground, to further Headley's point about getting in early, it dropped mid-March. We were 9.5 cents. The following day we went to 19.5. So I really do think you've got to find some good explorers, good developers and good miners, and I think we've got a few in this belt coming through now. If we can just scoot through, we're going to focus on the Crawford Gold Project. That's our main project. There we go. So we actually have 3 project areas. Leonora, which is a very mine advanced, near ready mining project at Crawford. We've got some nickel and gold at Ellis Rock, and the gold mine potential at Hidden Jewel. We're going to focus on the near-term project at Crawford. We've got 117.8 thousand ounces out there in the surface gold in the resource. It's bulk, low grade. It also means free dig and easy to mill. We drilled that December, so some 5 months after listing, we had a resource upgrade on that. 25% inside free dig material, and we've got some really great heat leach recoveries, I think topping out at 92.7%. We focused on stage 1, which is Crawford, which we'll get to shortly. We're looking to create an ore reserve we could get into and monetize quickly for the company, to really sort of fill the coffers and then start developing that project and our further gold projects in the area. Next slide, please, David. I'll scoot through some of these because we are time constrained, but that's the resource breakdown and ore reserve as it currently sits. You'll see most of our resource is in the oxide. Next slide, please. Yep, so focusing on gold, this is all about today. So we're looking to get that high margin oxide only ore reserve for stage 1 out. And we'll get into that now. Maybe just flick through the intro screen here. Awesome. This is where it's in the world, Leonora. It's known for gold mines in its day, and it still has some now. It's centrally located, obviously. There's some substantial M&A activity with Rowland there, with Genesis and Kin, and Silver Lake and Red 5 at the moment. It is a tier 1 mining region here, and not, but they've been mining out there for over 100 years. We are 40 km to the east of Leonora, the Crawford project. That's our main project. We've got a sealed highway. We've got access to grid power, great quality groundwater. It's in a graben. We've got town accommodation and provision if required, and it's pretty easy to get to. We've also got guys in the area that know how to provide mining services. So it ticks all the boxes for a standalone mine site. We go again, please. So this is what we're looking at the moment. We are Crawford is a highly advanced near mine ready project. You can see on the left there what we've completed to date. There's been 8,200 meters exploration RC drilling. That's in addition to the 2,300 that was drilled historically. I think it's important to note that this particular area was being privately developed by myself and another consortium. When we find it, we'll find it just a bit hard to get into the lines, the mills in the area. So we thought we'd list it, do it some justice, expand the resource, which we did, and then look at heat leaching ourselves, which is where we are now. So a lot of the work's already been done. We completed the pre-feasibility study this year, and we've also commenced the mining approvals phase. So you can see the resource there, 3.75 million tonnes at 1 gram. It is low grade, but it's bulk low grade near surface. And you see some of the intercepts we're getting there from the extension drilling. I'll touch on Miranda now, but I think we'll finish on that. That area was discovered via us and our extensional drilling in 2022. And we've got about 500 metres of strike on top of another 200 metres to the north and about 200 metres to the south to extend. And we've really targeted that high confidence indicated, 99.8% indicated 3D oxide resource. So not only are we sure it's there, or sure can be, it's also deep, shallow, and easy to process. Speaking of, can we go to the next one, please, David? I'll just skip through this. Basically, we've assumed conservative PFS parameters. One of those ones you'll see there is the sell price of 2,900 Australian an ounce. I think it's bumping around 3,500 at the moment. We also assume pretty high processing costs for what is a heap leach and a straight out flat recovery, which again isn't quite right. You'll get increased recoveries over time with a heap leach pad. Go to the next one, please. Lovely. So here's what the pit sort of looks like in 3 dimensions. You can see we've got nice big thick zones of super G material there. It's not really difficult from a mining perspective, pretty straightforward. We've just applied a standard 90-ton fleet to go in and mine this out in 2 stages. Obviously we start in the north, which is a bit shallower, as you can see on the left-hand picture there. So we can start getting some feed onto the pad and start leaching some gold. At this stage, we're hoping to be mining pre-Christmas and producing or pouring gold in Q2 2025. Next one, please, David. Okay, so here's the physicals. I won't stay too long on this. We've already gone through it, and I've got to hurry along. Maybe the next one. And again, anyone interested, please come back and circle back and have a look at these life and mine schedules. We can scoot again, one more. Okay, just touching on the metallurgy. So we've done 3 different phases out there at Crawford. We had some basic oil testing done right through to 2 lots of fairly intense column leach trials. And, we're getting from 77.4 to 92.5% gold extraction. The thing to note from that is the number of days leaching averaged about 15 days. We turned it off after 45 for the testing. We didn't really need to keep it on anymore. So it recovered very well. The material there is low cyanide consumption. It's got low amounts of cement required for agglomeration and percolation. pH is great because it's in a graben. It's a well-worn water area. Low contaminants, so we're not going to pour any orange bars. And it's minimal crushing requirements. So ticks all the boxes from a processing and metallurgical perspective. Next one, please, David. Right, for those interested, that's the flow sheet. Some that may look rather complex. It's actually very simple. We've only got 1 crusher currently in plan for the PFS. Most of the material, as I said, 75% is oxide. We envision 0 blasting. Anything we might have to put a rifter down there on the end of the dozer near the end of the project. But what we're really wanting to do is open up that easy stage 1 pit, have a look, monetize it, and then start extending the project out further along that strike that you can see around the right-hand side. David. Okay, the key highlights, probably first. So the stage 1 highlights, total mine life is 12 months, payback within 3 months. Stage 1 oxide gross revenue of 68 million. That's based on a 2,900 Australian sell price. We have low C1 all-in sustaining costs. The normal average New Zealand Australian is around about 1,900. With CapEx being that it's a heap leach setup. So we're looking at 18 million inclusive of capital costs and an IRR of 130%. So that's with a 12-month mine life at stage 1 oxide. By the time we look at rolling around to stage 2, once the extensions have been done, we would, of course, be still processing from heap leach. That heap leach material that's been processed and poured is paying for the pre-strip for stage 2, etc. So it just keeps rolling along. You can see some of the parameters that we use down the bottom. I've touched on those before, but again, fairly conservative. Last one, I think, David. Lovely. So touching on that extension and that potential to enlarge the project, recent historic drilling was, as I said, focused on that Crawford resource. We did some extra drilling, and in 2023 discovered the Miranda prospect. It's a fresh rock target. It's a little different to the oxides. There is some interesting geophys going on underneath there. I think the graben's running from the north to the south, and may well be concentrating the supergene from that pressure. We don't know yet. We need to do some extra work. We've still got the 500-metre northern corridor to infill drill, and we've also got the southern corridor, which is open at depth and along strike. So lots to do here, lots of exciting stuff, lots of good gold coming up for Crawford. And we're looking forward to guys jumping on board and joining the ride. I mean, at the end of the day, what we really want to do here is create a company that creates cash flow within that first couple of year period, which we're almost there. We might get a bit over time, and then looks to reward shareholders. We might receive dividends. We may not. We may use it to further the advancement of the project and or look for other projects. But either way, all things being equal, we should be looking at pouring gold in Q2 next year, and it's quite exciting for the company. So thanks for your time.
Thanks, Daniel. First question, probably an obvious one. How do you get your hands on such an interesting project?
Yeah, so it is a good question. I developed a private project 6 kilometres west of Paddington 7 years ago with a consortium, and we privately mined that through a nearby mill. I was looking to do the same again with the Crawford resource. It actually came out of King West, so I helped the IPO of as well. So I liked the resource, I liked the area. I knew I could monetize it. We were looking around for options as a private venture, and at the end of the day, with Mount Morgan's falling over, it just became too hard for us, and we took it to market instead. And it was right around that horrible period that Henry touched on, where interest rates went up and everything went down in April, and we floated in June, and the market decided they had gold fatigue, even though the gold price was 2,500 US, 2,500 Australian, so go figure. And since obviously increased, and I'm quite bullish. I always thought it was going to hit 3,500 this year, but I think it's hit a little earlier than I expected. However, I think it's going to stay around those rates for the foreseeable future and onward.
And in terms of funding, how does funding look?
If the funding looks good, so our max drawdown is 13 million on this. We can gear that to reduce that amount, but it's not a massive stretch to look for 13 to 50 million, 15 million, I should say, to debt fund the project. That's what we're looking at. There will be some equity, so there'll be a chance for people to jump in. I'd like to let more retail get on board. But at this stage, having only just sort of finalised the reserve and the PFS and progressing through the mining approvals, we've been focused on that. But obviously, any sort of debt we get would be contingent upon approval, and so that's why we're really focused on that right now. I think the debt side of things will take care of itself.
You touched on approvals. How does the WA approvals process work, and how confident are you of getting through it?
Yeah, there's a little bit of overlap between some of the project permits. So there's a mine proposal, a project management plan. They're the two main ones. They do sort of overlap. So it's a little inefficient there, and that is being tidied up. But it just takes time. It's about 3 to 4 months to go through and do all those reports and procedures. And then you've got the really big one is the mine closure plan. You've got to make sure you tick that. So we're just going through and making sure we're ticking all the boxes right now. We're finalising 1 or 2 things that weren't quite complete, like the surface water and the subterranean fauna. Again, nothing really looks like it's on the radar. I mean, this is the most brownfields new gold mine you'll find. It's had a history. It's in a well-known area, and it's been drilled out quite extensively.
Final question. You did touch on always having an eye open to opportunities. Clearly, getting this project into production is the focus, but do you keep an eye out for what might be around the corner or how to bolt on further assets or opportunities into Cavalier?
Yeah, absolutely. So Leonora's got quite a lot of privateer prospectors getting around, not just other companies like M2M or Kin looking to sell their assets, as I did recently. There's a lot of options for us to look to expand and to pick up some extra ounces. I mean, there's 118,000 ounces here now, and it hasn't had what I would call extensive extensional drilling. It's been really focused on that sort of singular area of high confidence. When you go and mine something yourself, you want to make very, very sure that you're confident in what you're doing. So I think short answer is yes, we will look around for other potential bolt-ons. But at this stage, yeah, the focus is let's get those approvals done. Let's start cracking it open and getting mining and pouring some gold in Q2 next year.
Focused on pouring gold, hitting the market at the exact right time. Exciting times ahead for Cavalier. Daniel, thanks for your time.
Thank you, David. Thanks, Henley.
Now I'd like to introduce Tim Wither, Managing Director of Maximus Resources, ASX code MXR. Maximus is developing a high-quality gold, lithium and nickel projects in Western Australia, and the company holds a diversified portfolio of exploration projects, largely centred around the well-known Kambalda region of Western Australia. On the ground, boots on the ground, always ready for work. Tim, we love to hear more about what Maximus is up to. Over to you.
Thanks, David. Thanks, David. Morning, afternoon to everyone, and hello to any Maximus shareholders that are online. It's always great to have the opportunity to talk about Maximus Resources. We're relatively under the radar stock, fantastic upside, and I like starting with this image. This image is of our Wattle Dam gold mine. It was mined over a very short 6-year period up until 2012 by Ramelius Resources. And in today's gold market, recovered over $900 million worth of gold. And it's a great example of the reason why we're all here today, because of the enormous wealth that can be created when we make one of these high-grade discoveries. Next slide, please. Next slide, please. So Maximus's granted mining tenements were situated 25 kilometres from Kambalda, sitting in world-class geology. This region between Widgiemootha and Kambalda produced over 15 million ounces of gold, 1.4 million tonnes of nickel metal, making it very globally significant gold and nickel belt. And now this region is becoming a very significant hard rock lithium region, with our tenements wedged between Mineral Resources' Mount Marion project and the Pioneer Dome. So at the end of the quarter, March quarter, we had 1.5 million in cash, and we're just completing the fully underwritten entitlement offer for shareholders, which will roughly give us around 4.2 million in cash after costs. And this will fund our next programs, purely focused on gold. And we also have access to 4.5 million in Australian dollars to fund our lithium projects through a lithium joint venture with Kemia. Next slide, please. So Maximus, we're in a great position, having a robust 335,000 ounces. The image on the right shows different gold resources across our mining tenements. Our focus is not to stop at this 335,000 ounces, but to grow to 500,000 ounces and beyond. And we're comfortable in achieving this, and as demonstrated by a 300% increase in our resources over 2 years. Our gold projects are centred around Wattle Dam Gold Project. There's existing infrastructure and a series of shallow gold resources. And in the background, we've been working through some near-term production opportunities. Gold price near record highs, makes toll treating very attractive to protect shareholders' value and to fund future growth. And as Headley mentioned before, gives optionality, to start small and to grow up our resources and future larger production. So, and you can see on the image on the right, there's some very clearly defined mineralised trends, which, along with the advancements in our geological understanding, we've been able to better assist with our better targeting to grow our gold resources. Next slide, please. So the company has 117 square kilometres of granted mining tenements. This is becoming more critical in Western Australia. So from the top to the bottom of our gold rights is over 30 kilometres in length. We have a national highway that connects Perth with the eastern states, running right through our mining tenements. And we've got multiple toll treating options on our doorstep. The image on the right is the golden source, and this is the first time a collection of database has been compiled, and it highlights a real large mineralized trends with numerous walk-up targets to highlight the fertility of this region. Just recently, while undertaking some field mapping, we collected some very large grab samples and with several above 2 grams and one 3.5 kilogram rock having over 9.8 grams per tonne. So it shows the opportunities there. And it's amazing to say, but given this location, some of our southern tenements, such as where these grab samples were taken, have not seen any gold exploration since 1996. And so that is when gold was at US $380 an ounce. So we've got fantastic location and fantastic geology and very underexplored given our location. Next slide, please. So zooming into our flagship Wattle Dam Gold Project, where August last year, we were really pleased to announce a 250% increase in gold resources. The MRE update, what really wanted to confirm is our long-held belief that we're sitting on a very large mineralised system, and this creates a base load for gold resources for future production and shows a significant exploration upside remains. Next slide, please. I like showing this image. It really shows the extent of the mineralisation across this Wattle Dam Gold Project, and it's only limited by drilling, with all the lodes open at depth, and you can clearly see a regular repetition of gold mineralisation. From left to right is 2.2 kilometres in length. On the right-hand side of the image sits the 8500 North, which is our focus for upcoming drill programs. And you can note that there is a lot of shallow gold resources. And as Hadley was talking about before, it gives you the optionality to start in small, toll treating small parcels, and then be able to fund larger projects and access larger projects and cutbacks further deeper. Also to note that in this image is the mineralisation, which is at depth and it sits outside the current mineralised resource envelope. So during a previous drill program, which was co-funded by the West Australian Government, we were able to demonstrate the continuity of the redback lode down to 500 metres below depth. So we intersected 11 metres at 3.2 grams and 2.5 at 6 grams. It really shows the continuity when we're on these orogenic gold systems, that these things remain open at depth. Next slide, please. So this image puts in the perspective of the Wattle Dam Gold Project. As mentioned, we're only top to bottom of this image is only 2.2 kilometres, and it sits in the centre of our 30 kilometres of our tenement strikes. And so for comparison, Astral Resources, 1.25 million ounce Mandilla project sits 2 kilometres to the east, showing very similar strike length. Astral Resources are sitting at currently at $80 per ounce EV. We're sitting just under $27 an ounce. Next slide, please. So the real prize for the company and shareholders is to find the repetition of the high-grade Wattle Dam Gold Project. And as mentioned at the start, it was one of Australia's highest-grade gold mines. Underground was 15 grams tonne, and it's been our recent theory that the main lode was terminated by an east-dipping shear zone, giving the potential for mineralisation to be structurally offset on the western side of the shear zone. So to test this theory, we drilled 3 deeper holes on the western side of the shear zone, and this area was previously untested. All the previous drilling was focused on the eastern side of the shear zone. So the success for the drilling for us was really the validation that the geology on the western side of the shear zone, proving that there's been structural offset identical to that seen within the Wattle Dam high-grade lode, and proving that there's been a structural offset. Next slide, please. So this is just another view of the targeted area, noting that we're looking for a 40 to 80 metre long ore body over quite a large area. So to our advantage, the mineralisation within the Wattle Dam high-grade lode has a very distinct geochemical halo, and that assists us in the effective targeting, drill targeting. So encouraging the highest levels of observed alteration and broad gold mineralisation was our most northern hole, pointing that this structural offset, lateral offset is a little bit larger than initially considered. And so this is quite exciting front for the company, and with completing this entitlement offer, it really funds us to go and start this next round of drilling. So, Wattle Dam was a very small deposit, produced over $900 million worth of gold. And if we can prove this theory correct and show that the high-grade load has been structurally offset, it's a real game changer for us in the company, and we really look forward to start drilling very shortly with this at Wattle Dam. Next slide, please. So I know that we're gold focused, but I can't not talk about a pretty exciting front for the company. So Maximus's multi-commodity portfolio includes 2 advanced lithium projects. We're in one of the most prospective hard rock lithium regions in the world, and this image shows the joint ventures held by Mineral Resources encompassing our project. We've really been in the box seat of recent corporate activities in this region. Next slide, please. So in October last year, we announced a strategic partnership with the South Korean government mining agency, Khmer, to earn 30% of our project, funding $3 million into our Lefroy projects, one of our 2 projects. Behind Khmer sits LG Energy Solutions, world's largest battery manufacturer, and LG has a non-binding option to acquire Khmer's 30% interest any stage. So significant partnership for Maximus. Next slide, please. So the reason why we're here on site today is because we're drilling the Kandui project. It has a very similar geological setting to Mount Marion, which sits 16 kilometres to the north of here. And it's the same controlling structure as Mount Marion. So initial wide space drill program successfully intersected several spodumene-bearing pegmatites, and the second phase drill program, which has already commenced and while we're on site today, is targeting infill and extension of these spodumene-bearing pegmatites at Kandui. So pretty exciting to be starting that as well. So next slide, please. So today, the company's market valuation, to assume that we have completed the entitlement offer, which is getting completed over the next couple of days, gives the company a valuation of $13 million. So after the entitlement offer, we'll have 428 million on shares on issue. It gives the company EV around $27 an ounce. It doesn't consider the US $3 million joint venture partnership for only 30% of one of our lithium projects, and our genuine lithium and nickel opportunities that we have, or our gold resources. So, our top 20 holds 47%. Beacon Minerals, our largest shareholder, their Geordie project is 80 kilometres to the north of us. So we've got a great base to leverage off. Next slide, please. So in summary, we're a small but dynamic, active explorer across highly prospective geology. Over the last 2.5 years, we've demonstrated commitment to ensuring responsible capital allocation. 82% is invested in the ground. It's resulted in a 300% increase in our gold resources. So we've got a robust gold resource to leverage off, significant growth upside demonstrated by high-grade gold discovery. And we've just about to start our second phase gold-focused exploration program, and also secured a very strategic and powerful partnership with LG and Khmer for our lithium. So free kick with our lithium. And in the background, we're focusing on some near-term gold opportunities, which we'll be able to advise the market when we progress some of those. So thank you very much for your time, and please feel free to add us to your watch list.
Thanks, Tim. You glossed over it a little bit, and you didn't say it was important, but moved along pretty briskly. The importance of granted mining tenements and mining leases for projects such as yours, but also from an investor point of view, looking at projects. How important is it having that granted ML?
Very important in Western Australia. I mean, these are pre-native titles, so we don't have royalties other than the state royalties on these. And it really expedites a pathway into production. And what we've been and are focusing on is small scale. So we're coming underneath a small scale mining license under 10 hectares. be able to get us quickly into production. And we're not taking on a significant debt and exposing the company. So these are all very, very fast and quick pathways into production.
Now, talking about the pathway into production, can you just talk about that in terms of the multiple gold resources that you do have and how you see that operating?
So we've got several advanced gold resources, predominantly at our Wattle Dam Gold Project, Larkinville and Hilditch. So all of these projects are all at surface, and they have the ability to be able to start small, an optionality to start small and then grow these, and funding future cutbacks to much larger resources. So as mentioned, we're right up against the national highway. We've got over 8 gold processing plants within 70 kilometres of our resource at the mine gate. So we've been able to, we'll be focusing on starting off the small toll treating parcels, which will fund future resources and leapfrog into much larger projects and fund future exploration programs.
Touching on funding, lithium fully funded, as you mentioned. Can you just reiterate the gold exploration programs?
Yeah, so the entitlement offer, and we really focused on the entitlement offer to include existing shareholders. So the entitlement funding, which is finalised, closed last Wednesday, and shares will be issued in the coming days, is gold focused. So in the coming weeks, once we finish this drill program, so the drillers will finish the lithium program, have a break, and then come back. We'll be focusing on and starting drilling at the Wattle Dam. So restarting second phase at the Wattle Dam gold offset, and then also targeting some shallow resource infill drilling at the Wattle Dam Gold Project. Subsequent to that, we'll be moving into Hilditch and Larkinville. So both resources, 14 and 20,000 ounces respectively, all start at the surface and a robust grade. So these will be infill drilling, and what we're wanting to do, and the aim is to bring these up into measured and to feed these into development study for toll treating. So they will be the second steps following toll treating process. So we've got lots of several regional gold targets to focus on our exploration, but the focus between now and the end of December, the calendar year this year, is to try and get into some toll treating and toll treating parcel delivered to one of the mills before the end of the year.
Clear focus on getting into production, strong exploration program, well funded, and ready to walk straight out onto the project and get going. Tim, thanks for your time.
Thanks, David.
I'd now like to introduce Dreadnought Resources Managing Director Dean Tuck, who will present on the exciting portfolio of projects the company has assembled and worked on over recent years, achieving significant results. And to tell you more is Dean. Dean, over to you.
Thank you, David, and thank you for everyone for tuning in to our presentation here. Move on to the next slide. And the next slide again, disclaimers, read at your pleasure. Company snapshot. So who Dreadnought is, a bit of an introduction for those of you that may not know of us, and welcome. Hope you enjoy the presentation. Dreadnought Resources, we are a West Australian focused exploration company. We're multiple commodities. We will try and focus today on gold. And I do have quite a few slides to get through, so I'll try not to blitz through it too quickly. One of the things I just want to point out here, we're not a lifestyle company. Board and management have invested over $6.6 million to date. We control about 15% of the company. We are strongly aligned with shareholders, and around 80 to 90% of all funds raised to date have gone into the ground, advancing exploration across multiple commodities, delivering multiple discoveries, as well as resources and gold and rare earths and copper and everything else. So we are a multi-commodity focus. We have quite an advanced portfolio, and we're very excited to continue exploration and this year focusing on the gold and copper with the rare earths figure in the background. Next slide. So Dreadnought strategy, as I said, we are an explorer. We're focused on that front end of the Lassonde curve. We are a project generator and explore and hopefully discover if everything goes well. And what does that look like? So essentially, the team that we have built, we specialize in being covered in flies and sleeping in swags. coming up with crazy ideas to go peg unexplored and unloved regions of Western Australia, mostly where mineralization is sticking out of the ground, and going out there and applying the first modern exploration techniques, geochemistry, geophysics, putting our brains to it, and making discoveries near surface. We generally view undercover exploration as a graveyard for junior explorers, and so we tend to focus on areas that have been historically unloved for reasons that are not sound geologically. And you'll see our portfolio, that's a reoccurring thing. Success for us on the back of discovery is to be carried into production or sell to a producer. So examples of success delivered there, household names of absolute greatness, and some of the ones that are in progress. That's sort of the spectrum of success that we look for, and of course the commodities that we look for as well. Next slide. So commodity focus going into 2024. As I said, we are a multi-commodity explorer, and we are and always will be. We're here to find metal in the ground in areas that are highly prospective. When you go into greenfields areas and you peg 10-year like Mangaroon, which is 5,000 square kilometers, you never know what you're going to get. You go look into the gold fields, that Maxima's presentation, fantastic work. You look at that 70 kilometers of area around where they are, and there's so many deposits, there's so many styles of mineralization. And so when you do greenfields exploration, we don't have a head frame. We're not exploring to fill that head frame full of metal. We're here to make that big discovery that is the future head frame. And so we go in eyes wide open. And so we always have optionality and a lot of options for us to do exploration. Going to 2024, that focus has been on gold and copper. And for the last 2 years, been focused on rare earths and critical metals, proving up the Yin and Griffith Creek carbonatite opportunity at Mangaroon. Prices are down there at the moment, though we're starting to see a return in rare earths and continued interest in niobium. So we'll continue to advance some of those things in the background. And of course, anything should change, we have some amazing walk-up targets to get stuck back into. But our focus this year has been on delivering the work program at Central Yilgarn, which I'll touch on, Mangaroon, the Star of Mangaroon Gold Camp, and how that's rapidly evolving story. And then back up to Orion and the Kimberley, where we have our copper gold opportunity, where in 2021 we made the Orion discovery, and we're looking forward to getting back up there and finishing that business. Next slide. Central Yilgarn, next slide. So where is the Central Yilgarn? We got 3 to 4 greenstone belts in the Central Yilgarn region. So we're next door to Ora Banda, Delta Lithium, West Farmers on one side, and we have Ramelius on the other side. It's been called a Bermuda Triangle of the Yilgarn. Early exploration hindered due to isolation, lack of surface water, and the rest. And modern exploration, sort of post-2000s, was dominated by the iron ore explorers. And so this ticks all the boxes for being an unloved and underexplored region, and we've been active out here for quite some time. We see the opportunities out here as a major discovery and the consolidated unloved greenstone belts, similar to what Yamana was back in 2013, 2015. And of course, Hemi, where no gold was supposed to exist in the Pilbara. Certainly, they've changed that mantra pretty bit. So opportunities, we see some commercialization of advanced stage tenure as an option for some of our tenure here. And of course, a joint venture development opportunity for the high-grade Metzke's find resource up on the Alara belt. Next slide. Looking at the gold in this project area, we have several camp scale targets that we have identified as focus for work. We've recently completed some drilling at T1, T2, and T6. The T6 drilling came up and met and exceeded expectations, and that's going to be a focus for us for the remainder of this year, as well as review additional target definition generation across some of the other target areas. And then the other focus on our work at the moment is getting the grant to the mining tenement at Metzke's Find. We applied for the miscellaneous licenses, and the mining tenement application is in progress, and get that going. And once that's applied for and granted, then we can look at our joint venture mining opportunities. Next slide. So T6, Chicken Little, we did a small drill program out here at Chicken Little, like I said, across T1, T2, and T6, try and chase up some of these walk-up drill targets that have been sitting there for a few years and get stuck into, find out which area we want to come back and focus on second half of this year. Chicken Little, some drill holes underneath some shallow oxides, banded iron formation drilling. We ended up with 17 meters at 4 grams, 28 grams silver from only 53 meters depth, and including 4 meters at 15 grams per ton. Quite exciting. That's the high grade opportunities we're looking for. And the T6 camp is around 3 by 3 kilometers in dimension, 3 kilometers wide, 3 kilometers north to south. There's a number of gold lodes within that T6 gold camp already defined by surface geochemistry and shallow air core drilling, such as Megatron, which has 3 meters at 7, 9 at 2.6, and Snowflake, which has 16 at 1.9, 4 at 8.5. Those areas haven't had much or any RC drilling, aside from the shallow air core drilling on top. So we're very excited to come back and focus on this area second half of the year when we come back down to Central Yilgarn and see what else we can find and see if we can convert any of these mineralized areas into proper discoveries. Next slide. Metzke's find, as we alluded to before, this is a resource that we announced last year. They don't all turn into Penny Wests or Never Nevers, but that doesn't mean that they're not worth a whole lot. So Metzke's find, we've got about 15,000 ounces at 6.8 grams per ton, a nice high-grade near-surface resource with over 10,000 of those ounces in the top 80 meters. On the back of Bright Star and what Black Cat's announced recently, we see this as high-grade gold, shallow, near-surface. It's a good opportunity for a joint venture development and feed some of the mills nearby, being only located pretty close to Riverina and Menzies. And as we said before, the grant of the mining tenements, and then once those tenements are applied for and granted, seeking partners for joint development of a shallow, high-grade resource. Next slide. Moving on to Mangaroon. Next slide. So what is Mangaroon? Large land holding. We got 5,000 square kilometers here, mostly pegged by us and a few deals consolidated in the region. It's an unloved history, exploration hindered by a lack of government investment in infrastructure, mineralization sticking out of the ground. And Mangaroon really has been the project that keeps on delivering for us. Originally went in for the gold and the nickel. We made a significant rare earth and critical metal discoveries, which I won't talk about today, except that they are taken along in the background and we continue to work on those. So opportunities for gold, it's a major discovery within our Star of Mangaroon camp and potentially identifying a new camp, and also joint venture development. We have granted mining tenements across Star of Mangaroon, Pritchard's, Two Peaks, and a few others. So we see that as a near-term development opportunity, put some resources on those mining tenements, applied for miscellaneous licenses, and there's an opportunity to commercialize those with some of the nearby mills. Next slide. So looking at the Star of Mangaroon and sort of zooming in, that is a 1 kilometer strike there. Talk about Star of Mangaroon, discovered and mined by the pastoralists in the 1960s, limited exploration around the historical diggings, and recent drilling by us continues to confirm small high-grade lode, very attractive, all near surface. Those are from 16 meters, 8 and 9 meters depth. And there's no deep drilling and no drilling essentially along that mineralized strike. We have outcropping mineralization, some shallow workings, and exploration drilling here is essentially non-existent. And that's what we look for in projects. That's why we see the opportunity. There's never a guarantee of success in exploration, but if you're going to be looking for a significant discovery going into these areas that have proven mineralization and no modern exploration or any exploration, is a fantastic place to be looking. Next slide. Stepping out, we've done the first airborne magnetic surveys and first detailed geochemical surveys over this region that the Star of Mangaroon camp has ever seen, and that is continuing to evolve. This is an area that was found by prospectors by a quartz vein sticking out of the ground. Where's the geochemistry? Where's the pathfinders? There's going to be so much more opportunity than just the Star of Mangaroon itself. There's a lot of gold found in this area historically, all done by prospectors, and very little to no major company exploration. So the work that we're doing, the stream sediments, systematic exploration into the soils, we continue to expand the Star of Mangaroon camp, identified a number of targets. And coming up, we have drilling at the historical workings, such as Star of Mangaroon, Two Peaks, Pritchards, and Diamonds, some of which don't have any drilling in them ever, despite historical production. And then commencement of drilling of our new targets. Just completed some surveys out here to get approvals. And that's things like Tiger, Rory, and Hudson, and other areas. Very excited. This is a very live and evolving story out here. We've just completed another 2,500, 3,000 soil samples, expanding and infilling on the work that we've already done. So continue to see new targets being generated and new targets being defined as we create a real target-rich environment to come out here and get a couple cracks of drilling in. Next slide. That takes us up to Taraji-Yampi. Next slide. So Taraji-Yampi, again, unexplored since 1978, was off limits to exploration. Mineralization sticking out of the ground, pretty common theme in our project generation here. No mineralization and no exploration. It's a great place to go explore for a junior. Opportunity here is additional high-grade massive sulfide discoveries and of course, high-grade copper gold epithermal discoveries similar to Grant's. Next slide. The Orion discovery that made in 2021 had some fantastic hits there, such as 16 at 2.2 and 6.6 grams gold. You got 12 at 1.7 and 5 at 3.7 gold. I've highlighted the gold there as it is a gold focused presentation. We see Orion, again, this was under a little bit of cover. I think we hit the Gossan at 1 meter depth. So very exciting. We've tested some of the upper zone down to about 100, 150 meters. We have some deep magnetic targets and an evolving target generation and target re-ranking exercise in progress as we speak. And essentially the drilling that we've done over the last year and a half, 2 years, has confirmed that this is a DeBrusa style sort of VMS camp with the copper and the gold. Just had some ex-chief senior geos from Sandfire in doing a review, walking us through, and it's been very exciting to go through and reinvigorate interest in this and see what we're going to get up there and drill this year, including some of the untested major magnetic blowouts, very strong off-hole EM conductors. This is a very gold and copper-rich system, and we're very excited to get back up here and commence drilling, as well as doing IP surveys to generate targets for epithermal. Next slide. So summary of plan for 2024. As we said before, our plan going into this year, very focused on high-grade gold. That's drilling the Central Yilgarn, which we kicked off the year with, and then we'll finish off the year, probably going back down to Central Yilgarn to follow that up. Like gray nomads, we like to work our way north and with the weather, and then come back down south. We'll be drilling at Mangaroon, commence in June in 2024. That might be subject to change here in the near future as opportunities present themselves to get up to Kimberley much sooner. We continue to have ongoing target generation definition work and look forward to lots of news flow coming out from there. And what's really driving us at the moment, unfinished business, Taraji Yampi, generate and test, finish off that program, really re-ranking and better understanding those targets that we have generated in the past, and get up there and find that next copper gold, find Orion's friends, and also generate and test targets for epithermal. We continue to advance the rare earth niobium in the background. We're starting to see that the rare earth interest tick back up, and niobium interest is maintaining fairly steady. So we'll be doing some work on that as appropriate and looking at options of getting back out there. We have EIS co-funded funding to test the Gifford Creek type targets, and we'll have to look at that later this year. And then, of course, summary plan, keeping it to the gold, Metzke's Find, Star of Mangaroon, pursuing the joint venture development options for these gold assets in the current gold market. Next slide. So takeaway message, significant news flow. We put a lot of money in the ground. We still average close to an announcement every single week, putting out exploration across our projects, a lot of boots on ground. We have a track record of delivering discoveries across a number of commodities. Don't have a proper gold discovery in there as of yet as Dreadnought. We do have quite a few in the background as the company and our previous exploration and whatever else, our skills and histories. And so we're poised to deliver those gold and additional discoveries in 2024. And messaging again, 6.6 mil invested to date, 15% board and management ownership. We have a lot of skin in the game, put a lot of money in the ground, and very focused on delivering value for our shareholders. Next slide. And that's it. Back over to you, Mr. Tasker.
Thanks, Dean. JV discussions. You touched on them a few times during the presentation. When do they start occurring, and what does a perfect partner look like?
What does the perfect partner look like? Perfect partner for us across any of our projects is one that brings in the skills and funding capital required to develop a mine. So we are an exploration company. We focus on that front end of the Lassonde curve. So the perfect joint venture partner for us across any of our projects is one that brings in that specialty, that skill, and the ability to bring those mines online. Talking about the ones that, in more specific, Metzke's and Star of Mangaroon, joint venture partners look like people that can help us dig that up and deliver those to local mills, whether that's Star of Mangaroon going up to somewhere, say, Paulson's or down to Westgold and the Bria, or whether that's at Metzke's going to somewhere in Menzies or Banda, Leonora, or down to Ramelius. It's looking for someone that can help us dig those up and essentially take those to mines, commercialize the assets there. They're small and high grade, so we're not going to build a mill in their own right. So it's looking for someone that can come and help us toll mine that and partner with us and split the profits.
Like a number of the other companies who've presented, it appears certainly interesting projects that have a lot of exploration potential in regions that are overlooked in some respects by the majors. Why do you think the majors are overlooking them? But also, similar to the previous presenters, therein lies the opportunity.
That's right. Why are the majors overlooking them? I wouldn't say the majors are overlooking them. We have had a a number of majors in the room across our projects from day one. I think it's more along the lines of the majors tend to like to acquire assets these days as opposed to go out and explore them themselves. Within Dreadnought, we've got experience with BHP, Rio Tinto, Goldfields, and many others. So we've all worked inside the beasts themselves and see how they operate and have the networks there as well. I wouldn't say that the majors aren't interested. I'd say the majors aren't interested in the ground, saying the majors probably aren't interested in doing the exploration themselves.
And just touching on that, when you're discussing with majors sort of your own exploration ideas, techniques, and plans, do you think there becomes a time, we've seen it historically, but do you think there becomes a time where Dreadnought potentially could be the exploration partner of choice for some of these majors who don't want to take the exploration risk, but do want to see the results of projects developing?
Yes and no. I'd say there's a couple sides to that, and there's many angles that you could pursue that down. You look at some of the options, like South 32's got a couple long-term partnerships that they sort of go in. They're sort of, we look at the commodities that we cover. Is someone going to come in and we're here to be taken out? We're here to go into development. We're here to actually make that big discovery and create that competitive tension. If you partner with someone early on to find things for them, and there's no guarantee of competitive tension that you're going to be taken out for a bidding war later down the line, we find that unattractive. So partner with someone early on. If we define a target of shareholder money, we are going to drill that target of shareholder money, and the major can buy the discovery that we make. If we haven't made a defined target yet, then a major can come in and partner with us, and we would explore with them on the condition they free carries to production. In order to have some sort of long-standing arrangements where they get sort of an option over all of our things that prevents competitive tension down the line, a discovery that we make, that's unattractive to us. So there's a few different ways to skin that. Anyone that comes on board and wants to take us into development, that's one thing. But if we generate a target and you think you're going to come in and drill that target that we've defined with shareholder money for us and for the free kick, then I don't think so. We're going to make that discovery ourselves. We're going to see that upside, that front of the Lassonde curve. So either come with us for the journey up the Lassonde curve, or you buy us out at the top.
Unequivocal there. Thanks, Dean. A great presentation. Clearly a portfolio that is yielding strong results. Exciting times ahead for Dreadnought. We look forward to following with interest.
Thank you very much, David.
Now I'd like to introduce, yes, our last presenter, but clearly a company many of you have on your watch list based on the number of people watching and the number of questions that are coming in. So I would like to introduce Paul Bennett, Managing Director of Medallion Metals, who are focused on developing a standalone gold and copper mining operation at its flagship Ravensthorpe Gold Project, located some 550 km southeast of Perth. So a great project in a great location, and clearly a company that is on the watch list. We look forward to following with interest. Paul, over to you.
Good on you, David, and thanks to Market Open for arranging the event. Great lineup today. We're pleased to round it out with an opportunity that's very much leveraged to gold, to copper and silver. It's a basket of metals that's certainly got a lot of positive sentiment around them at the moment. And we've been focused on building a substantial inventory of those metals down at Ravensthorpe since we listed in 2021. And I'm going to talk to everyone today about the multiple opportunities we see to not only continue to grow that inventory, but also commercialise the metal that we've currently got on the books. Can we skip through to slide number 3, please? So if you buy a share in Medallion, you become the proportional owner of a business that has JORC compliant resources of 1.5 million ounces of gold, 120,000 tonnes of copper metal, and 11 million ounces of silver. That metal's contained in 2 distinct deposits. They're located 10 kilometres apart. They both daylight at surface, and they're both open at depth and along strike. Our ground holding is dominant across both of the prospective stratigraphies for both of the deposit styles. And both of those ground holdings are significantly underexplored. The assets themselves are situated in the southern goldfields of WA. It's in a region where there are 2 significant resource projects underway at the moment. That demonstrates that you can permit, you can build, and you can operate a mine in Ravensthorpe. In terms of our flagship asset, the Ravensthorpe Gold Project, it's significantly de-risked. We're on granted mining leases. We're clear from a heritage perspective. We've advanced the permits substantially. There's a PFS that's been completed. We've declared all reserves. Based on current spot prices, the project generates an NPV after tax of over $500 million at those current spot prices. And it's on sale at the moment via Medallion, which has got a market cap of circa $18 million at the moment. We're in the right commodity. We're in the right time in the right vehicle. We offer investors exposure to new discovery, to continued resource growth, and also development optionality on those existing resources, all in an environment where the $8 gold price is trading at record highs and the equities are yet to catch on. Next slide. Just touching on corporate, 308 million shares out. We showed cash and receivables at the end of March of $3.5 million. That receivable arises from us renting our camp to our neighbours, Mount Cattlin down in Ravensthorpe. There's an enlisted investment in our neighbours' nickel search, and there is a loan from our major shareholder. It's only repayable in the case of the change of control event or if we make a decision to build the mine down at Ravensthorpe. So as mentioned, market cap $18 million. If you adjust for the cash, the debt, the listed investment, it backs out an EV of approximately $17 million or $13 an ounce on a gold-only basis at Ravensthorpe. And that's relative to a peer group that's trading at on average $40 to $50 an ounce. It's a steal given the quality of those ounces. And we'll throw in the copper at Ravensthorpe and then also the metal at Trilogy for free. In terms of leadership, I won't go through the bios here. Those names will be known to people who know the sector in WA. Non-executive directors, forefront of the industry, forefront of capital markets. We all share a vision of building that mine at Ravensthorpe, and that mix of technical and commercial experience is a great overlay to a young, capable, very hungry senior management team that's driving the growth at the assets. Next slide. So turning to the flagship asset, the Ravensthorpe Gold Project, we've got the dominant land holding in the Phillips River mineral field. And what's critical about that are the tenements that straddle the Annabelle Volcanics, and they're mapped in yellow on this slide. It's these rocks. They've hosted all of the historical production. They are host to all of the known resources and the known prospects. They're also host to the pegmatites that Arcadium is mining at Mount Cattlin. There's been about 130,000 ounces of gold, 20,000 tonnes of copper metal produced in this area over the journey. Gross metal value of that material in today's prices is a rough 60-40 split between the gold and the copper. We think copper is going to have an increasingly important role to play in the Medallion story as things move forward. We're certainly seeing that in the drilling at depth at the Cundip Mining Centre. Now, it's at the Cundip Mining Centre, located at the southern end of the field where the Archean dips beneath the Proterozoic and continues on to the south. It's here where the bulk of the activity, the bulk of the expenditure, the bulk of the drilling is taking place, and this is where the bulk of the resource growth has come from. Of the 54 kilometres that we've drilled thus far since listing, approximately 50 kilometres of that has been at the Cundip Mining Centre, growing the resources to where they stand today. So Cundip will continue to be the focus, but at this point in time, the attention of the business, the attention of the project team has really turned to the regional discovery opportunity. We made an announcement last week. We're mobilising a 2,500 metre drill program to RGP, testing 4 priority targets across the Annabelle Volcanics. They're highlighted in this slide here. These are early stage, potentially high impact targets, 3 of them with no bedrock drilling to date. Plenty of news flow in the short term. What we're striving here really is to uncover a new Cundip style high grade gold copper sulfide lode and then confirm the prospectivity of the entire belt. Next slide, thanks. So moving on to the Cundip Mining Centre. The Cundip gold copper mineralisation, and I guess across the field more generally, it's not typical of your general shear hosted WA gold deposit. And the most obvious difference is the significant copper credit. We think the closest analogy is probably Silver Lake's Deflector project, specifically as it relates to mineralogy, and then more generally as it relates to scale. Deflector has been a tremendous success for Silver Lake after overcoming some scepticism pre-development. We see a lot of similarities between the two assets at similar stages of life. And it's a deflector kind of outcome. It's that kind of performance that we're striving to replicate here. Cundup itself, it's a strongly mineralised, moderate grade gold copper system. The grade and the geometric variability is quite low. If you look through the historical drill hole announcements from Medallion, you don't see plus 1,000 ounce intercepts, but what you do see is consistent mineable widths and grades. So 2, 3, 4, 5 metres, 5, 6, 7, 8 grams per tonne. There's a selection of the plus 20 gram metre hits shown on this long section. They occur consistently throughout the ore body, and it's these grades that really drive the project economics. And it's that consistency, we believe, reduces resource estimate risk and by extension reduces the mine plan execution risk. Average depth of drilling here, 100 metres below surface, deepest hole into the system, 420 metres. The system's open at depth. Ounce per vertical metre profile here, averages 4,000, peaks at 7,000. 100 metres below surface where the data density is at its greatest. We've consistently added ounces along strike and at depth here. If we could achieve and maintain an average ounce per vertical metre profile here of 5,000 to a depth of 500 metres below surface, which is still shallow for an Archean gold lode, then this area gets really interesting in terms of its scale and significance. There's also the opportunity to uncover new lodes here. Within the granted mining lease boundary, these lodes are projected to intersect at depth and in some cases along strike. There's the potential to uncover new lodes beneath the remnant Proterozoic cover to the south, and that's one of the targets that we'll be testing in coming weeks. And then we know that there's gold in the bounding tonalite as well. So all of these opportunities exist within a 1.5 kilometre radius of where we have located the processing plant in the pre-feasibility study. It's got great potential. It's a great address. We think it's got multi-million ounce potential over time with continued investment. Next slide, please. So focusing in on the resource estimate itself, mineral resource now stands at 1.3 million ounces of gold, 59,000 tonnes of copper metal. Combined, that's a gold equivalent inventory of 1.6 million ounces at 2.6 grams per tonne. Gold drives the project economics here. Copper enhances it. Overall metal content has doubled since we listed. Roughly 1 million of those ounces are in the indicator category. 3/4 of them are within 150 metres of surface, so potentially available for open pit mining. For every metre that we drilled since we listed, we've added approximately 20 ounces on a gold equivalent basis. And every ounce that we added cost us approximately $15 an ounce. That was a great business model when we were valued at $30 an ounce, find 15, have them valued for 30. Given the current valuation, not so attractive. And that's one of the reasons, it's not the only reason, but it's one of the reasons why we pulled back on the extensional program and began to focus on de-risking those ounces that we already had in the MRE. And we did that by commencing the pre-feasibility study almost immediately after completing this resource estimate in mid-2023. And the results of that PFS were announced in October of last year. Next slide. So PFS released in October last year, high level, the project produces approximately 780,000 ounces of gold, 16,000 tonnes of copper metal over a 9-year life. That's about a 92,000 ounce per annum run rate over that period on a gold equivalent basis. Pre-production capital, $163 million, all-in sustaining costs, $1,600 an ounce. That's Aussie. Net the byproduct credit. That study demonstrates that that metal can be commercialised using industry standard mining and processing techniques and then generate attractive returns over that mine life relative to the risk that we take on in a development scenario. The favourable cost structure, both in all-in sustaining cost terms and all-in cost terms, gives our shareholders that great leverage to $8 commodity prices because, again, that post-tax NPV lifts up to in excess of $500 million at the current spot prices. It's a really solid result. It's an important milestone for the team, for our shareholders. What it says to me is that this project is going to get built. It's really a question about by whom and under what circumstances. So the PFS itself, it was an exercise in maximising NPV. This is exactly the approach that you take with a bigger balance sheet and if you're an established producer. But with equity markets the way they are at the moment, tough at our end of the sector, it's clear that that capital hurdle that we need to jump here relative to our current market cap is seen a significant impediment. So we look at that hurdle and we think, well, if we can't go over it, well, can we go under it? Can we go around it? Is there some other way that we can commercialise that metal? So what we're looking at is other alternatives, and those alternatives may relate to seeking to maximise IRR as opposed to NPV. So one of the approaches that we're looking at taking there, next slide, please, is in relation to the sulphide development scenario. So if you cut the Ravensthorpe Gold Project mineral resource in the fresh only above a 2 gram cutoff, it backs out a resource of 5.6 million tonnes at 4.3 grams gold and 0.6 copper for 770,000 ounces of gold contained and 36,000 tonnes of copper metal. Now, this is the highest value subset of this resource with simplified mining and processing. Upfront capital will reduce. The perceived met risk will reduce because we're treating a single met domain and the best understood of them. Copper becomes circa 20% of the project revenue on day one. Development footprint reduces. This can easily fit within our existing permitted envelope. And importantly, it's high value ore, so therefore it can truck and potentially lever off some of the established infrastructure that's within economic trucking distance. It doesn't crimp our growth opportunities. The oxide and the trans ore can always go through at the back end of the mine. When the capital's repaid, the banks are out of the way and everyone's much more relaxed about that material. So we're still scoping this scenario out. It looks extremely attractive from on the work that we've done so far. And we could produce a study quite quickly here, given the significant bank of work that we've done with the PFS in late 2023. So more news to flow on this front in coming weeks. Next slide. So bringing it all together, we can see the opportunity at Ravensthorpe really coming together, really taking shape. The resource is de-risked. We've done the work. We've grown it. We've de-risked it. We've got options now to commercialise that significant inventory of metal. I think there's a high probability that this resource continues to grow with continued investment, and that gives confidence in the longevity of the mineral system once it's up and running. The near mine, the regional discovery opportunities, they're potentially game-changing because we're really just scratching the surface of the Cundit Mining Centre and the Greenstone Belt more generally. So Ravensthorpe Gold Project, inclusive of the cash-generating camp, that's the core asset of the business. It's where the focus will remain in the short to medium term. Upcoming catalysts include the results from the regional drilling program, which will be getting underway in the next month, and then also more updates in relation to the sulphide development scenario. In addition to that, we've got the portfolio assets. Our neighbours nickel search, we've got investment there that offers exposure, our shareholders exposure to new nickel and lithium discovery opportunity in the underexplored Carlingup terrain out to our east. And then there's Jerta Cut-Up. That's over half of our ground holding in Ravensthorpe. It represents the entire accessible portion of a sedimentary basin, proven to be fertile for SEDEX deposits as confirmed by the Trilogy deposit, which is the significant resource is shown there on this slide. Together, we've got multiple routes to value here, a really solid foundation to continue to look to return Ravensthorpe to being a significant gold and copper production centre in WA. We think we've been successful in achieving that. It'll be to the great benefit of our shareholders and also the local community. Next slide, thanks. So I'll wrap it up. We think Medallion represents a compelling opportunity for investors who are looking for exposure to advanced gold and copper exploration in WA. The business is well run. It's attractively priced relative to its peers. We own assets with great potential in a great location, and we're laser focused on maximising dollars into the ground that increases the value of those assets for our shareholders. If you haven't done so already, I encourage you to take a closer look at Medallion. I'll finish up there, David, and I'll turn it over to questions.
Thanks, Paul. As they say, good things are worth the wait, and clearly worth the wait. A number of questions have come through. I just want to touch on the PFS and the NPV you published on the RGP in October 23. Yep. What assumptions were used, and how does the current gold and copper price environment change things?
So the PFS is about 6 months old now. So I think the base case assumptions are in Appendix 3 in this presentation. We used 1875. This is all US dollar commodity price assumptions. So 1875 gold, $20 silver, and $7,200 a ton copper metal. And I think the exchange rate was 0.64. So everyone will be familiar with where those spot prices are sitting at the moment. So things have changed dramatically. In broad terms, what that means is that the revenue line of the project has increased by approximately $500 million Aussie. Now, on a pre-tax basis, that basically flows straight down to that line. So that's the leverage that the project has to those commodity prices.
Question or statement and a question. Firstly, great job with the company to date. That's coming clearly from a shareholder. Re the sulfide development scenario, what else can you share re progress or future key milestones? And is this the primary development scenario now?
We're still working on whether this becomes the primary development scenario. The work's ongoing, but it does look extremely attractive for all of the reasons that I went through on that slide in the presentation. Certainly, capital's a significant hurdle for us. How do we access enough capital to build this project from scratch? And I think that's one of the reasons that Medallion trades at a discount to its peers. We are, in some senses, viewed as a stranded asset, given we are right at the southern end of the Yilgarn and not within trucking distance of any established gold processing plants at this point in time. So that hurdle is seen as a big one to clear. Now, the sulfide development scenario, it solves for a number of those problems. And so we are taking a very close look at it. And I think it's probably going to get there in terms of what we focus on and begin to run with. But at the same time, we are chasing down every conceivable different opportunity to try and fund the big project further along to that final investment decision.
Do you see any interest coming through for Trilogy given the recent uptick interest in copper?
Yes, we do. We have had a couple of approaches. Given where concentrate TCs and RCs are sitting at the moment, there has been inquiry on the Trilogy front. And if you establish a float plant to treat the RGP ore, then we don't talk about Trilogy a lot, but there is a distinct gold and copper domain there that's separate to the lead and the zinc. So it's about 1.4 million ounces of that resource is in that category. So it's certainly another growth option that we have in the portfolio if you get to the point where that flotation plant's established in Raby.
And what about M&A? Is there an opportunity, given where the asset is, given what is or needs to be around it to really take it forward, is there an opportunity to sort of pick up more around you to build some further scale? Or is there an opportunity for people to come and knock on your door? Clearly, nothing's been announced, so I don't want to put you on the spot in that respect. But does that M&A sit in the back of your mind?
It's always there. It's all about generating the best outcome for the shareholders, and we're focused on pushing this as far as we can. But it may be that we just don't get the opportunity to develop the asset. Someone else comes in and takes it away, and that perhaps is the solution here to break the deadlock. So we're open to every approach, and then there's also, I think, there's infrastructure that potentially is complementary to what we're seeking to achieve that might be becoming available in the near future, and that might enable us to continue to break that nexus as well.
A lot of commentary here on what drives the re-rate, and you've touched on it a little bit, whether that's the securing of funding, sulfide development pathways, strategic partner. How much does any of those overtake the others, or are they all looked at in unison and hopefully one of them rises to the top at the appropriate time?
Yeah, they're all being run in parallel. I think that, the tried and tested way to add shareholder value is make a new discovery. So we're giving ourselves every chance by rolling out this RC drill program. Those targets are priority targets. We've reviewed that portfolio carefully, selected them very carefully, and so we're very excited about seeing what the results are going to roll in from there. So that's that's what we're focused on immediately at the moment. That's the real opportunity that we're driving ourselves. But then there's all these other opportunities as well. So sulfide development will be the next one that we either settle on. And then whatever happens, whatever might come from left field as well.
Well, shareholders like left field ideas, and they like shareholders working hard, like management, sorry, working hard to protect their value. And clearly you are doing that. The response, as I said, from the questions coming through and the comments coming through are all positive. So while everyone's looking for the re-rate, they clearly think that Medallion Metals and management are doing the right thing. So hats off for that. Appreciate you coming on today, Paul. Look forward to following the company with interest. Look forward to seeing that re-rate come through in the not too distant future. So exciting times ahead, and we watch with interest.
Good on you, David. Appreciate it.
As I said in my introduction, the purpose of this series is to give you an opportunity to engage with companies that are either on your watch list or companies you're looking to get onto your watch list. Today, clearly, there was a number of companies on your watch list and some you may look to add. I'd like to thank Headley for the outstanding introduction and overview of where the gold market is currently. I'd like to thank each of our presenters for taking the time to present their respective stories today. Put them on the watch list, keep an eye on them, because clearly they all have a big future ahead, exciting times ahead for each of them. To you, I'd like to thank you for watching. I'd like to thank you for participating and asking questions, and we look forward to seeing you again in a couple of weeks' time.